So this obviously is something we've talked about a lot, is that stable coins are now strategically valuable to the United States of America. There is no ifs, ands, or buts about it. We speak facts here on this show, especially after the Genius Act. What have we been talking about? We say stable coins are the ace in the hand for the United States. They're a way to get marginal lenders to the country because every single stablecoin minted is a U.S. Treasury buyer. They are T-bill purchasers. So if you want more lenders to the U.S., grow stablecoins. What's the best way to grow stablecoins is to grow Bitcoin, and vice versa. When stablecoins grow, Bitcoin grows. When Bitcoin grows, stablecoins grow. They are the most liquid trading pair in the future world reserve currency. Period.
Jack Mallers talks about Bitcoin, money's future, and global finance shifts. Let's dive in together and uncover the big ideas.
Bitcoin is a public utility. It's open source software. It's very important that anyone who wants to buy it can buy it. Can you imagine if it was like, oh, hold on, Larry Fink, you can't get this neutral fair money yet because based on my assumptions, retail hasn't had enough time. That's not how it works. That's not how it works. And another thing, at the end of the day, money is supposed to be a reflection of your contributions to society. It's supposed to be the value you're creating for those around you. Like, Elon Musk has created a lot more value than the janitor of my middle school, supposedly. And I'm not making I'm favoring the elite over this janitor. That's just what the free market says. The free market says we, the world, we society, owe Elon Musk over $400 billion worth of stuff because he's created that much value. Now, there's no right or wrong way to live life. If you want to be a janitor, be a janitor. And to be candid, janitor in my middle school is probably much happier than Elon Musk. Elon talks about how depressed he is all the time. There's no right or wrong way to live life. Money is not a proxy to happiness, prospering, family. It's not. But what it is keeping track of value. Okay? And so if you want more money, what I've said frequently, be more valuable. Bitcoin is not a vehicle to make retail rich and extract wealth away from anyone. Now, Bitcoin is fair. It has been a bottoms-up movement. And so it has happened to uplift the individual and extract concentrated power from the elite and corporations and governments. That's true. But that's not its intended purpose. It's not in the white paper to do that. It's supposed to be money. That's it. A neutral, fair, equitable money cannot bias retail versus this or that. Eventually Bitcoin should be 1 Bitcoin equals 1 Bitcoin. And again, the way to get wealth is to provide value for the people around you. The market should value your contributions to it. So, I don't know. It's been 15 years until Larry Fink showed up. Sorry. That's the free market for you.
Bitcoin whales have just pulled off their biggest sell-off since mid-2022, unloading around 115,000 BTC in the span of a month. That's roughly $12.7 billion worth of Bitcoin hitting the market, a massive wave of selling that has already pushed prices below $108,000. Analysts say this shows clear signs of risk aversion among large investors, as these big players continue cutting down their holdings. Crypto Quant data reveals whale reserves have dropped by more than 100,000 BTC in just 30 days, making it the largest coin distribution seen this year. The heavy selling has created short-term pain for Bitcoin, but there's a twist. While whales are letting go of coins, institutional investors and ETFs are quietly scooping them up, acting as a counterbalance. This back and forth is keeping prices from collapsing completely and suggests the market's resilience is stronger than it looks. Even though whale pressure could weigh on Bitcoin in the coming weeks, the longer-term view looks healthier. Despite the volatility, Bitcoin is still only 13% off its all-time high from mid-August. A year ago, the one-year moving average sat at $52,000, and today it's nearly doubled, sitting at $94,000 and on track to break $100,000 soon. So while whales are dumping, the bigger picture hints at Bitcoin's steady growth continuing, with strong hands and institutions waiting to pick up what's left behind.
If the US is going to use stablecoins and Bitcoin as a liquidity sponge, as a way to find marginal lenders to the United States, which we've been talking about, and I know I sound crazy, guys, but I promise you I'm not. First, we'll see that they need oversight over the offshore market. Right now, there is no oversight. You'll start to see some headlines. Trump talks about needing oversight over offshore market for national security, blah, 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 blah. Next, tying the use of central bank dollar swap lines with the Fed and or Treasury to opening up certain aspects of digital markets to U.S. tech firms. Next, regulations put forward to require stablecoin issuers to hold dollars in a U.S. bank branch and or T-bills. Encouragement of stablecoin issuers to list on the U.S. stock market. We saw Circle do that. U.S. big tech firms adding crypto wallets to their social media apps. We've seen Stripe. We've seen SoFi. We're starting to see big tech integrate stablecoins. Keep an eye on this. General positive statements by members of the Trump administration about stablecoins. Okay, so I encourage you guys to read the full article. Sorry I had to read through that, but it's really important. The Eurodollar market is massive. It's $10 to $13 trillion. The problem with the Eurodollar market is not buying T-bills. So what the United States wants to do is get them lending to the government. How do they do that? Stable coins. I'm telling you guys, Bitcoin and stable coins are the liquidity sponge. They're the best expression of currency debasement. They're going to soak up all the printing. They're going to soak up all the liquidity. Bitcoin's going to 250 to a million this cycle. That is still my prediction. I don't let the dumps phase me. You can't phase me. Okay? Now, let's go on. Go big or go home. Buffalo Bill Bessent has a choice. Go big or go Democrat. Does he want Team Red to triumph in the 2026 midterm and, most importantly, the 2028 presidential elections? I believe he does. And if that is the case, the only path to victory is to finance Trump's ability to provide more free shit to the plebs than the Mamdanis and the AOCs of the world. Therefore, Bessent needs to find a price-insensitive buyer of U.S. debt. Obviously, he believes stablecoins are part of the solution given public statements of support for this technology, but he needs to go all the way. If the Eurodollars and deposits of the Global South and Europeans don't flow into stablecoins, he must Bismarck them with his star-studded member. It puts the dollar on its skin or it gets the sanctions again. 10 to 13 trillion in the Eurodollar market, $21 trillion of currency deposits in the Global South. That puts a target for stablecoins at around $34 trillion. If we get even a fraction of that, Bitcoin soars. Bitcoin absolutely soars. So this is a very good article. Highly recommend reading it. It is a practical deep dive into the thesis we've been talking about on this show. Now, I'm not just going to pitch you some crazy idea and say, believe me, bro. The point of walking you guys through all of that, and I know it was dense, is to show you that the headlines that Arthur started to predict have already started to come out, okay? We've covered these headlines on the show. So the U.S. would start weaponizing swap lines.
Former Wall Street trader Josh Mandel has sparked heated debate by claiming that quantum technology is already being used to steal bitcoins from old dormant wallets. According to him, a powerful player is quietly exploiting this futuristic tech to scoop up coins without ever stepping into the open market. Mandel, who previously gained attention for a bold Bitcoin price prediction, argues that only on-chain analysis could reveal such unusual patterns of theft. The Bitcoin community, however, isn't buying it. Industry experts quickly dismiss the claim as unrealistic, pointing out that quantum computing simply isn't advanced enough to crack Bitcoin's cryptography today. Harry Beckwith of Hot Pixel Group bluntly said there's zero chance of this happening, while others mock Mandel for stirring panic. Still, the long-term question lingers. While current quantum machines lack the power, future breakthroughs could pose real risks. Some researchers warn that within the next 20 years, Bitcoin's security could be tested in ways never imagined, potentially reshaping the entire crypto landscape. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time.